Okay, then so now let's go on to our invited talk. It is my great honor and pleasure to welcome our guest speaker, Mr. Ning So. And we are truly grateful that Mr. Su has joined to share his time, knowledge, and experience about private equity with us. So, Mr. Su is currently the managing partner of Wentworth Capital, a private equity fund with nearly $20 million in investment capital. He has over a decade of investment experience and has also held major leadership roles in global technology, including at Reliance Jio and cutting-edge work related to 5G or 6G, cloud computing, and open source innovation. In addition, he is a prolific inventor with more than 30 patents and patent applications and serves on the Industry Advisory Council of the Erik Jonsson School of Engineering and Computer Science at UT Dallas. So, again, it is truly a privilege for us to learn from him today. And please join me in giving a warm welcome to Mr. Ning Su. So, Mr. Su, would you like to share your screen?
All right,
Mhm.
let me share okay, I just sent you a request to turn on the
Oh,
sharing.
yeah. Sorry, I think, can you try again? I think I should have enabled sharing.
Okay, all right, got it. Okay, let me know if you can see my screen.
Oh, we can see your screen. Yeah.
Okay, all right. Well, it's great to share some the things I do and some of the knowledge I have with you, aspiring future young entrepreneurs and I guess current investors as well. Um, so today my talk is about, let me see if I can get this one up. Yeah, so today my talk is about private equity and want to introduce to you what is private equity and what does the private equity do, and also introduce to you that the specific fund that I'm currently managing. Okay, so private equity is essentially a pooled capital from investors, and there is a term called LPs, limited partners. And so those limited partners are typically wealthy individuals, individual families. So you have family office, family funds, or institutional investors, such as retirement funds, um, some of the endowment funds, and so and even some of the insurance companies or banks. So those institutional investors also invest their capital into the individual private equity fund. So those are the limited partner, and then the fund itself is managed by general partner. And so, like me, I am managing partner, so I'm the general partner that managing the day-to-day operations, decision making of this particular fund. Typically, GPs, the general partners, make the day-to-day decision, investment decision, organizational decisions, and LPs are the passive investors. They own a share of the company through their investment of the capital. A typical private equity fund then takes those pooled capital to invest in either private company or real estate properties or projects. Okay. So the goal is, of course, like all fund, the ultimate goal is to make money. So the GP in this case for the private equity fund is to actively manage those assets and create additional value and then exit in a significant profit. So what is PE fund do? that is different from a regular publicly traded company and so on. I see. Okay. So we provide a capital injection for operations improvement, and allows the companies that PE fund invest to have strategic mergers and acquisitions, or to acquire or retain some of the talents that are needed for those companies. So the PE fund typically when we invest in a company or in a project, we very much take a hands-on role. And we have, if we invest in a company, we typically will be injecting ourselves into the board of the company, and we want to steer the direction of the company. We want to, a lot of times, control the company, or even have the taking those companies, some of the public companies, private, to have complete control over the company. Or private company, we can very often acquire majority share of the company so that we can have control of the company, how to improve the company to gain the profit expected. A typical time horizon. Okay, so we as at the PE fund, we typically looking at on a per asset basis or per project basis. So we are either buying a company or inject capital into a company, or acquire a project, a property, and we have a finite duration. Okay, depending on how this PE fund is established, what is the fund guideline says. But it's very typical that each asset, each project that we invest in has a 3 to 7 year period. So this is very different, that you have a finite time associated with each and every asset and project we invest in, so that we can tell LP, what do we do? Why do we acquire this company? Why do we invest in this project? What is the potential we see it? How much we are going to do? And what is expected return on annualized and total return, and so on and so forth. So it's project by project or asset by asset based, and every asset has a expected duration. And the exit strategy typically is we either sell the asset upon the time is reached, or bring the asset, the company, onto public traded. So have IPOs, or find a different type of other PE firm to buy it. So it's very common. You can see the companies sell from PE to PE to PE, because each and every PE has a slight different strategy to the individual asset that we acquire. Okay. All right. So how is the PE fund structured? So as a PE fund manager, there are two major ownership that involved in the PE fund's organizational structure. One is the limited partners, already said about it, is the either institutional LPs or a high net worth investors. And they have very limited liability and limited control over the management, but it receives investment distributions. So that those limited partners is called limited is because they are most likely passive investors, and they believe in the vision that the GPs set out to do for this particular fund. And they invest money in it to achieve the stated goal, the profit goal of this fund. And each individual fund, PE fund, has a very clearly defined scope. What do we do? And every fund has a very clear scope. This scope are usually very clearly and narrowly defined. And so that LP can see, okay, this is a very clearly defined, narrowly defined goal. I can use this fund as a vehicle for diversification purposes, for profit achieve certain profit goal purposes, and to asset balance purposes. Okay, so they usually take a very passive role. Then the active role becomes the GP's responsibility. So we are the ones that actually manages and evaluates and oversees the daily operations of each individual projects. And the GPs earns a management fee, and this typical fee is 2%. And a carried interest, which is that once we exit a project, there is a certain percent of the profit that GP get to realize. A typical industry norm is 20% of the profit. So if I buy a company at $100 million and we manage it for 5 years and we exited at $200 million, so we made $100 million profit. 20% of it will be shared by GP and 80% of them will be returned as a profit to the LPs. But then again, this is typical and customary, but the variability is very large between PE to PE. Some of the PE fund, you don't have the regular profit sharing. Some do. Okay, so I will tell you some of the different ones, especially the ones that I'm managing, that I can tell you some of the details. And a very typical PE project or a asset is and even the PE itself can be a fixed life PE. Okay, so it's a closed-end PE is a very typical one, and many of you have probably seen some of them. A typical fixed life is 5 to 12 years. I do have seen that some of the closed-end PE is 3 years. And usually you don't have anything longer than 12 years. This is typical. And then you have an initial investment period followed by a value creation and harvest phase. Okay. You do have occasionally go beyond the initial investment period and you have the GP reserve the rights as part of the fund's guideline to request for additional capital investment throughout the life of this particular fund. Okay. Now, closed-end structure is, I would say, 60 to 70% of PE. You also have a PE that is open-end structure. That means you don't have a fixed life for this PE. Although each individual project asset has a fixed life. So you can have a open-end PE structure, but each investment, each asset that this PE fund acquires has a fixed life. So that's another variation of PE fund that you can see. And that is typically the rest of the PE. So makes up about 30 to 40% of the PE in the market today. Okay, so some of the typical terms you will see on the PE, they are all PEs, but they can be called very differently. So many of you probably heard of a VC, a venture capital fund. A VC fund is usually a PE fund, but it's a specialized type of PE fund. And the venture capital fund typically invests in early stage startups to late stage startups. And they want to invest invest in a potential that has a very high growth potential and typically focus on innovation. And they are usually, in contrary to what I just said, that a lot of the PE fund takes a majority share in the company. A VC fund typically takes a minority share in the company. Because of startups, the failure rate is extremely high. I am also involved in several VC funds. Um, it's a hit and miss strategy. So you want to spread out your bets, hedge your bets. So many of the VC fund um, takes a minority share of the company and they don't directly involve in the day-to-day decision making of the company. However, they do provide constant advice and guidance to those companies. So it's a very typical, starting from Peter Thiel made it very famous, the Founders Fund. He takes a back seat, but he continuously to cultivate, to provide guidance and help to the founders to make them more successful. In turn, that he will make more money. So he started a fund called Founders Fund, which is very famous. Now, the VC fund is typically structured as a PE fund. So you have GP, the Founders Fund. Of course, Peter Thiel is their GP, and they have a bunch of LPs. And there are also within the VC, you do have large ones, smaller ones. Some of them only focus on very early stage. So you have Angels Fund. Angels Fund is also a very common, is also a different type of a PE fund. So it's a smaller form of VC that invest in very, very early stage. So they can invest in seed round or A round. That's typically qualified as angel fund. And then VCs becomes Series A, Series B, Series C, and so on. Okay, so those are the further subcategories of types of VC within a subcategory of PE fund. Okay, all right. Then there is another type of PE fund that focus on growth of equity. And those companies, what I call them, typically called milk the cow kind of company. Um, those companies are, those PEs are looking for some very profitable, very mature, slow growing, but dominating companies. So they want to have a cash flow. So they are looking for cash flow. They are looking for the company to steadily, slowly but steadily gaining new markets, develop new products, scale operations. So in contrary, if you look at this two different type of PE fund, the VC fund is they are not looking for cash flow at all. So it's all about high potential, high growth, but also comes with the downside of high failure rate. Growth equity PE fund are looking for high cash flow, high return, but slower growth, very measured growth. So some of the very large PE fund are in that category, and you probably have heard if you are very much into the market today that in the recent months, because of the AI and because of in particular some of the things that Anthropic's doing, many of the software company, software as a service called SaaS company that have backings of the PE, many of those PE funds are in trouble. So if you look at the software company. Software companies are very typically a mature company. They have a software is dominating the market, used by a lot of companies, a lot of people. It's a established company, very profitable, making a lot of money. So some of them have a PE's backing, but because of the AI is having a very large impact in that segment of the market. So in turn, because those companies are impacted, many of the PE funds that invest in them are also impacted. Okay, that I will mention a couple of companies later on. The third type of specialized PE is also very large, is a buyout company. LBO is called is stands for leverage buyouts. Okay, leverage buyouts is the extreme of the growth equity PE. So what they do is they don't just invest in mature company, they just buy it. They use the money, sometimes they use their own money, plus they borrow the money from the bank and to go ahead and acquire a company. So typically in this kind of situation happens is a PE sees this company is mismanaged. So they have something against the current company's direction, strategy, or management, or all of the above. And they think that because of those things, that they can come in, acquire the company, either take a new strategy or change to new management, introducing new products, or take this company and separate it out and subdivide it and to generate more potential or market capital for this particular company. So this type of PE is specializes in LBO, light leverage buyout. And they come in, they want to dramatically change the company structure, change the strategy, change everything. So to realize the full potential of this particular company, okay, that's the third category of the PE that is also very large. The fourth type of large PEs is real estate PE. Real estate is a very, very large market. If you look at the entire US market, the the entire real estate market in the US is almost equal to the entire market size, the stock market size of the entire United States. Okay, so it's a very large market, real estate. It's a multi-trillion-dollar business, and many of them are owned or financed or backed by PEs, those real estate PEs. So most of the buildings you see, so office buildings, shopping malls, strip malls, a lot of structures, even some of the tollways, some of the stadiums, so like Cowboy Stadium, American Airlines Center. So many of those commercial buildings, commercial projects are owned or backed by commercial real estate PEs. And also residential. A lot of the residential is also backed by real estate PEs. You probably have heard that President Trump just had a new executive order limiting that the private PE, how many residential projects can each private PE own? So I think the limit is 300. Okay, so many of the apartments are owned by private PEs, owned by real estate PEs. But then again, if you have a builder building apartments, building houses, many of those construction builders are also backed by real estate PEs. So their when they are building houses and building apartments and so on, their capital is borrowed from real estate PE. Okay, so those are the four largest segments of the PE, and each and every one of them is multi-trillion dollar business. So this PE itself is a very, very large business in the United States and all over the world, in that matter. What are the why does PE matter, right? So you guys invest in public companies, private companies, and so on and so forth, but why does PE matter to our economy? Okay, so many business, if it wasn't because of PE, they would have been failed. If a business need capital, they can go to bank to borrow it. They can also go to PE to borrow it. When you go to bank to borrow it, there is a problem is that bank has very limited understanding and skill to evaluate your business. So a lot of times, if you go to a bank, tell them your business plan and how to do and what to do and so on and so forth, bank wouldn't be able to understand you. So that they have no ability to loan you money or evaluate your business and your business strategy appropriately. But they go to PE. PE specializes in different segments of the business. So if you are in their segment, you go to the right PE, they understand your business. They will make sense of what you want to do. And in addition to that, some of the PE will reach out to a business, says, hey, what you are doing is not optimized. You're not doing, you should. Let me help you to do this. I'll give you money, I'll tell you what to do, and you can do it and help you. So many of the failing business can be saved by PE and have been saved historically, many businesses. So in turn, it will preserve jobs and fuel innovation. For instance, we talked about Angels Fund, VCs Fund for the early startups, and so on and so forth. And many PE also invest in small business. Okay, so it helps start new business, helps innovation, preserve jobs, and save company from failing and help them to be successful. So there is a very large unseen economic impact that PE is having in our overall economy. Okay, now as an individual, as a person, you guys are in high school, middle school, okay? In the future, if you want to find a job, is there a place for you in a PE fund? Yes, there are some very, very large PE fund, okay? So you can be an analyst, research a project, research a business strategy, research a specific market, a specific product, and so on and so forth. So you will see a lot of fund uses many researchers, they call them analysts. So you do data research, you do marketing research, product research, and so on and so forth. Okay. You also have operators. So operators are the ones that PE hired to help to fix the business. So in many of the LBOs, leverage buyouts, PE, okay, they have a group of professional managers. They are really good at restarting a business. When the LBOs buys a business and they typically let the management go, they will insert their own management. They will quickly get on the job. They already understand the business. They have the connections. They know the business. They know the upside, downside. They know the suppliers. They know the customers. They know the market, and they know what to do. So operators, they come in and fix your business for you. And after that, and they say, okay, this business now was sick. Now it's healthy, and turn around and sell it. They move on to the next project. So those are the mercenary managers, operators that specialize in business fixer. They will fix that. Okay. And then there's associates. So any type of things when you invest in something, when you are trying to fix something, when you try to do something, there are lots of math involved. okay? Accounting, dealing with various projects, cost management, cost control, market analysis, business analysis. So a lot of investigative maths involved. So here you can work as associates for the PE firm. Okay, of course, if you want, you can do it like myself. I started my own PE fund, so you can be a GP. Or if you have certain amount of money or wealth, a typical LP for a typical usually a minimum starting point to become a LP is you can invest $100,000 in a business in a PE fund. So some of them can be as high as $10 million. The lowest ones I have seen is about 50,000, but 100,000 is quite typical that you can become an LP in a PE fund to participate into that part of the business. Okay, so before I give you a very high level introduction overview of what PEs do and who are they and what they do. Before I get into my company, I want to tell you some of the very large PE fund that you probably have heard of. You must have heard of Blackstone. Blackstone is one of the largest PE fund in the world. It manages over $1 trillion of asset. And then if you invest in stock market, you for sure have heard of BlackRock. BlackRock is not a PE fund, but BlackRock came from Blackstone. Some people may not know. That's why their name is very similar, and there are a lot of historical lineage between the two. Now, BlackRock is a public invest typically into stock market and so on and so forth. Larry is the CEO, manages over $10 trillion of capital, invest in stock markets, in various things. But Blackstone, where it came from, is a PE fund. Within Blackstone, there are many, many, many funds. So it's a fund of the funds. Okay. It has hundreds of smaller funds under it. They are involved in all the different type of PE investment I have just mentioned. Everything, right? VC fund, LBOs, growth fund, real estate. So, Blackstone is one of the largest a real estate fund under it, many, many funds. Okay. So those are some of the names that you have heard that came from the world of PE. Now, my fund, Wentworth Capital, this particular fund is established, registered in the state of Wyoming. So it's about 3 years old. So we primarily do our business in Texas, but we are registered in Wyoming to leverage franchise tax benefits. So I don't want to get into the tax details. And this Wentworth Capital Fund was the merge of the two funds I founded, both previously. One is called Banff Capital. Another one is called Moreland Ventures. So I combined these two funds together and to help to ease the burden of management, consolidated them to manage them together under one fund so that I don't have to jump in between. And this particular one, Wentworth Capital, before my Banff Capital and my Moreland Ventures, both are closed-end fund. I told you that as closed-end fund, that means we cannot, once it's set, it's not going to be open and have a set date to close. I found that it is rather rigid for the things I do. So I combine them together and it becomes an open fund. So my fund itself has no end date, but each project we do have a predefined date. is typically between 6 months to 3 years. So our projects are typically short-term projects. Okay, the longest term is 3 years. The shortest term is 6 months. But we have invested in some of the projects that are the shortest one we actually have invested in is 24 hours, the projects. Typically our LPs, so we have two GPs. I'm one of the GP, and another GP is the one, so we divide up the work. I am usually the business, I'm on the operations side. That means I underwrite all the projects. I directly deal with all the investors, well, no, all the customers, and handles day-to-day operations decision making and the investment decision making. And my partner usually handles all the investors. So he handles all the investors in that relationship, and handles all the legal issues and all the accounting issues and bookkeeping issues and taxation issues. So that's how we divide up our responsibility. And just two of us managing this fund. And we have a group of LPs, are typically high net worth individuals and families and family offices. Okay, so we do have some family offices. One of the very wealthy Italian family that their family is started with a father that is a very famous doctor in DFW. So he has 11 kids, and his family fund also invests in our family office also invests in our fund. So today we have a working capital about 16 million, and this number fluctuates because we are a open-ended fund. We allow money to flow in, flow out on a quarterly basis. So the highest we ever went was about 20 million. The lowest we were managing is about 16 million right now. And what is our fund do? Okay, so we are providing a defined, not defined, we have to do a periodical fixed income return to our LPs. So we are investing in real estate projects that including a new constructions and flipping and rental. So we providing capital to construction companies, or to the real estate investors that either are building new houses or buy a house and completely renovate it and then sell it, or buy a house, renovate it, and lease it out as rental. And so we are a company that provide capital to construction company to do those things: new construction, renovation, and rental. Okay, so we are currently only focused in Texas. Previously, until about 2 years ago, we have investment outside of Texas as well. We had in Oklahoma, Alabama, Georgia, North Carolina, in the several what I call red states. Right now, because of the real estate market downturn happened about 3 years ago, we contracted our business. So right now we are only involved in the projects in Texas, and within Texas, we do about right now 80% of our business in DFW Metro. But we do have other 20% in other parts of Texas, such as in Houston, San Antonio, Austin area, and so on and so forth. DFW area is very large, right? DFW area, so we go as far west as Midland, close to Midland, as far east as past Greenville. So if you know the geography, and far south as Waco, far north as the border of Oklahoma. So go to places like Sherman and even further north than that. And we are managing and distributing our profit on a quarterly basis. So every quarter, our investors can either inject new capital, of course, has to be approved by our GPs, or withdraw the capital, and the profit is distributed to each and every LPs every quarter. So we have a quarterly distribution profit schedule. Okay, so our bookkeeping and our accounting is done. Of course, we're reporting monthly, but is computed and returned and on a quarterly basis. So it's from that sense is acting as a fixed income fund for our LPs. Okay, that's all I have about this fund. So it's about 45 minutes. I timed it pretty good. And I'm open for any questions you might have.
Okay, thank you so much, Mr. Su, for that like really insightful and in-depth presentation. I'm sure we all learned like so much about the different types of like private equity funds, how they work, and the details. Okay, so does anyone have any questions for Mr. Su? Okay, in that case, I have a question. Okay, I see Chloe has a question. Okay then, Chloe, you can ask yours.
Um, Mr. Su, what was the inspiration behind starting your own fund?
That's a that's a very good question. So in my heart, I always want to be an entrepreneur. Okay, I'm an innovator. Um, I am very heavily involved in the high tech industry. So if you know the technology, I am one of the early pioneers of cloud computing. I'm also involved very much into the innovation of internet. So I have been very innovative, but also very entrepreneurial. I have done technology startups, but in my couple of tries of doing the technology startups, I have found out is a lot of time I have perfect knowledge. I have perfect idea. I have a perfect team. I even have the perfect timing. I still fail. So startup life is very challenging, very difficult. And as I was talking with you, I failed for various reasons. Okay, so I'm not going to go into detail of that, but it's some of the hard lessons I learned. But as I am going through the life cycle of a serial entrepreneur, I have found that if I'm closer to the money, then my chance of success gets higher. Okay, so if you look at you call it a lot of things starts with so a lot of technologists like me myself, we start with technology, with products, with vision, with ideas, with innovation. But the reality taught me a lesson is I probably should start with money. Okay, so because of that, I said, okay, if I do that, maybe I should start my own fund. So what do I do? So I did actually, today we focused on my PE fund, but on the side, I also have my own angel fund. Okay, I also work with other VC fund. So when they are investing in the project, I can pull my money into it. Okay, so this fund that I do is because when I pulled myself out of when I was doing the startups, when I was doing my corporate job, I said, okay, when I get old, you guys are young, right? You guys are energetic. When I was your age, I have ideas popping up in my head every minute. Sometimes ideas, I have so many ideas, I can't even sleep at night, right? I just keep thinking about new ideas, new things I want to do, new innovations, and so on and so forth. But when you get old, I'm much older than you. I'm probably older than some of your parents. Okay. I found that your innovation, your creativity, mine in specifically, start declining once I pass 45. Okay. I don't have nearly as many new ideas, innovative ideas as I had before. And so my ideas start declining, my creativity start declining, but my experience and my connections, my touch and feeling is stronger as ever. And I am a very distant admirer of Charlie Munger and Warren Buffett. So I say that, okay, if I am a person that I will never retire, I don't believe in retirement. Okay? If I will never retire, can I find a job I can do until I'm 99 years old, as Charlie was? Okay? So I need to find a job I can do when I'm 99, when I'm 100. So my goal is to beat Charlie Munger. He worked until 2 months from his 100th birthday. So I found out that, yeah, if I start my own fund, I can do that. So my primary reason for funding this is, number one, I found that I can no longer be a serial entrepreneur on technology side because of my decline of creativity. However, I can still involved in career paths, cultivating creation, cultivating anything else, and actively involved if I do it through investment, such as a PE fund. So I hope I answered your question.
Yes, you did.
Okay,
Thank you.
certainly.
Yeah, wow. Thanks so much for that great advice. Like I really I'm really inspired by Charlie Munger too. So that was like really cool. And okay,
Yeah, he's a cool guy. Love
yeah.
the guy.
Yeah, it's like really amazing. Like he's like always learning and like people say he's like a walking bookshelf. So it's like very inspiring. Yeah.
Yeah, keep on learning, kids. It's just like, learn until the day you die.
Yeah. That's so true. Hmm. Okay, so I actually have a question. So how like it's about like when you're investing in like constructions or real estate, like how do you evaluate like which like what to invest in? Are there any like important factors?
Yes, yes. So real estate, I have always said, um, you know, if you look at the track record or the primary PE fund, one of the driving factor behind it is cash flow. Cash flow. Okay, so if you are admirer of Buffett and Charlie, you know that they don't invest in precious metal. They don't believe in gold. They don't believe in silver, right? They don't believe in bitcoins, and they believe in real business. And the definition of the business is very simple. Does it produce income? Does it produce cash flow? Very simple. That's their most fundamental belief in investing in a business is how much cash does it bring? How much revenue does it bring? Okay. If it does not bring revenue, they don't call it asset, they call it liability. Okay. Same thing with real estate is you got to look at its book. What is the potential to bring in the revenue? Okay. For real estate, what is this revenue? It's rent. Okay. So if you build in an apartment, you rent it out. You build it in an office building, you rent it out. If you build a shopping mall, you rent it out to various stores. You build a stadium, you rent it out for the teams, for the venues, for the events, right? You build a house, you can rent it out if nobody buys it, right? So you can sell it to the buyer. So it's very simple that if you want to hold that asset, one of the most fundamental piece of evaluating it is how much cash does it bring in to you monthly, yearly. Okay?
Yeah, okay, thank you so much. Yeah.
Certainly.
So I also have a question. Like, besides real estate investing, will you consider like investing in companies, like or like some tech companies, for
Yes,
example?
I have. I have. I have. So if you look at, I have been, I have advised multiple startup high-tech companies. I also invested in the high-tech companies. And what I will tell you is two things. Okay. Number one, the failure rate of a high-tech startup is extremely high. How high it is? 98%. 98% of the companies fail. So 92% of the company fail completely. Okay? And out of the remaining 8%, 6% of them that they don't fail completely, but they are like not making any money.
Mhm.
So they are just hanging there. They have they make $100, but they also spend $100. Only 2% of the companies make actual profit. So your chance of failure is very high. That means you invest in 100 companies, only two of them make it. A lot of people hear, yeah, you have unicorn. Oh my gosh, this company made $1 billion. They didn't see how many companies lost them hundreds of millions of dollars before they make one. Okay. The Peter Thiel is a exception of the rule. Elon Musk is exception of the rule. So if you ask Jensen Huang, right? He is now the most famous startup ever. Okay. And people ask him, if you look at one of his interviews he said, Jensen, if you know who you are today, would you go back and still do what you did? Would you still found and start your company? He said, heck no. And he, as the most founder of the most profitable and highest valued company in the world today, he said, heck no. That tells you how hard it is. Okay. So I just gave some of my son's friends he is also a aspired entrepreneur. He wants to start his own business, even though he's only a 12th grader, right? I told him that you expect to be really working your butt off, right? And Elon Musk, look at his interviews, how close he was to bankruptcy, how many times? And those are real. His SpaceX was 2 days away from bankrupt. Tesla was 2 weeks away from bankrupt. That's after he made, hundreds of millions of dollars from PayPal. He dumped them all in, right? He's the richest man in the world, not right now, but my gosh, he almost, as brilliant as he is, he was so many times close to bankrupt. Okay. A lot of people, when I invest in a startup, that's another thing that I want to tell you guys is typically when I invest in a startup, I really invest in people. Some people invest in technology. Some people invest in vision. Some people invest in hope. Some people invest in trend, right? Well, AI is trending now. I invest in trend. I'll tell you, all the AI investment companies I know that invested in AI 3, 4, 5 years ago, they all bankrupted. Okay, the only AI company that I personally involved becomes very successful, and successfully sold. That company is very. I was the one that gave the company's idea, invested in the company. I started the company before AI. I gave the idea to the founder in 2016. That's 10 years ago. 10 years ago, nobody heard of AI. There's no such thing called AI. We had a technology, we had a product, well, I had an idea, I had a need, and I gave them the idea. They made a product that I need at the time, and then the company became very successful. The company was sold in 2024, sorry, in 2024. And so the founder, who is a friend of mine, he in 2025, he went and joined Jonsson in NVIDIA, became their director, right? So that's the only AI company that personally I know very well. I can tell you everything about them, but because I was part of starting that company in 2016. That's way, way, way before ChatGPT was ever even thought of, before AI become a such thing. Okay, so the technology behind it, on supervised learning, machine learning, all of those things we used back in 2016. And many of the technology were developed even way before that to solve a practical problem. So what my story is, if you suddenly some technology, something become trendy, everybody wants to invest in it. I'm telling you, you are years too late. Years too late.
Mm. Okay, thank you. And okay, great. So does anyone else have any other questions? Mm. Okay then. So seeing that time is like almost up for our meeting anyways, then I think that's it. Thank you so much, Mr. Su again. That was a really, really like inspiring, really like amazing lecture. So thank you so much for coming here today.
Certainly. Good talking to you kids. All right, I'm leaving now, and bye-bye.
Mhm. Bye. Have a great evening.
You too. Bye-bye.